like hiccups. I could see over on my screen that my frame rates were just starting to drop like a rock. So I want to stop the stream before anything, before I have to restart anything like that. So yeah, sorry if you guys are watching this live for the third time, or getting this alert for the fourth time or whatever. I do apologize. But yeah, we are doing Adobe, doing their Q2 earnings. After I said I was going to do it last week, couldn't do it last week because I had, because I did a stream on Sunday that lasted until like 4 a.m. Kind of regret it, kind of don't. Yeah, so now I'm doing it this time. And hopefully we can get it all done. On this model, I do not have my charts done. I may add that in at the end of the stream, not sure. But to kind of walk you through the model, what I did for this one is, let me close up the quarter real quick. Adobe goes and reports revenue in these kind of product groups. They also do their COGS in the product groups quarterly, and then they have revenue segments that they report yearly in both their 10K, and they also do it quarterly on a data sheet that you can go and find on their IR website, which we'll be looking at later on in the stream. So for some of these numbers you may not see it for 2020. That's because there hasn't been like, these are some formulas and it's only been one quarter so far, or like these are yearlies. So some of the data is a little bit inconsistent. But what's awesome about Adobe is every year they give you in their, I believe it's their investor day. It's their investor day, or it's their big once they do like a product launch, product update, like a day, and in there they give you the TAMs for each of their kind of big revenue segments in their total TAM. So so you can go and kind of, like I did, where they give you like, oh, here's our Creative Cloud, or and all that, and our, you know, core, our Document Cloud. You can go back and you can kind of recreate. You can go and recreate their you can kind of recreate their earnings statement. I mean, those big revenue groups that we were talking about earlier. And then because you got TAM, you can go and figure out market share. And change and all that stuff like that. And then what you can go and do over here is what I did, which was I just forecasted out. Okay, what would their share be? You know, market share grows by 1%, market share remains constant, which is a little switch that we have over here that we can flip on the model. And that way you can go and do share, and then share you can go in, once you get market share of total TAM, that can go and be revenue, and that's, you can go and forecast out your revenue. Fun little way to do it. I thought for Adobe it was smarter to do it than versus just trying to forecast out each individual segment, because this way you can at least go and say, okay, what's their market share versus, I think it's going to grow at this. Alright, so other than that, the rest of the model is pretty the same, except our GGM APV little valuation method, which is just because I have them buying back so much stock that it kind of changes their WACC a little bit. So this is just a method to go and recalculate WACC based on a change in capital structure, like a massive change in capital structure, which in my forecast, I kind of do. I have them, you know, going from 481 million shares all the way down to 432, so pretty decent decrease in shout. And also, if I recall correctly, on their debt, I have them paying off pretty much all their debt. So going from 3 billion in debt to nothing is pretty spectacular. Oh yeah, I was just looking at raw debt, long-term debt versus long and short-term debt. So you can go and see I pretty much eliminate all their debt. I actually could fix that to go and make it to 0 if I wanted to. But because we have such a big change in the capital structure, I did GGM APV to go and change the WACC. To something lower than what it is over here on the WACC. So that goes and changes it, gives it a little bit higher valuation because you, like I said, you have that change in capital structure where virtually, like previously, their percent of debt and their cost of debt, the percent of the cost of the cap structure, which is debt and the cost of debt, is radically different than at the end of that model where they pretty much have no debt. So cost of debt isn't really even a factor, it's all just cost of equity. So that's why I have that valuation method. Going back to us just finishing doing the little model update, I didn't want to go and delete everything that I had in the past stream. So this is just, we're just going through, we did the income statement quarterly, and now we're just doing the balance sheet. And actually we're going to do a cash flow statement as well. This is one of the models where I was doing quarterly cash flow statements, which I know in the last video when we were doing SiriusXM for our little model build, when I was just doing a kind of similar to this, where I was just doing a low key, chill stream of us just entering in financials. I was like, I never try and do a quarterly cash flow statement because it's just too much work to go and update, and then here we are doing one where I have a quarterly cash flow statement. So yeah. But yeah, as always guys, let me know in the chat if you guys have any questions. Let me know in the chat if you guys can see everything on the screen. Let me know in the chat if you want to skip a song, if the volume's good on the sound for the songs and all that stuff like that. Yeah, let me know. Let me know if you guys are having a good night as well. Oh, forgot a 0 there. I'll get you every single time, especially on balance sheets. For getting a 0. And I already have kind of, I know I said I was kind of looking at any of the stuff, but I did kind of flip through their, they do a nice little conference call guide where they have like a little slideshow with the accompanying slides that's really nice to go and flip through. So I flipped through that when the earnings came out. But other than that, like I have no clue what their earnings were. So this is going to be interesting. I can already see gross margin was up. Looks like EBITDA margin was up as well. In fact, I'm surprised I don't have that on here. So you know what? Let's just go and slide that in there. What you'll also notice is because they do go and give COGS by segment group, I also do have the individual gross margins for all those segment groups, which I think is super helpful to go and have. I am not a CPA, not even close to a CPA, my man. Thank you, PokerMad, for talking in the chat. I am nowhere close to a CPA. In fact, accounting is not super. It's not a super big strong suit of mine, so I will go and say I probably do make mistakes on here, especially in some of my forecasting of cash flow statements. But I never think it makes too huge of a difference. I'm sure someone in here that's from an investment bank will probably go and scream, yes it does. But I never think it makes too big of a difference. Yeah, man. Thanks for joining the stream. Thanks for joining the chat. Alright, so, oh yeah, that's right, I was doing EBIT margin, which improved again. And sequentially improved as well. Huge, actually, sequential EBIT growth. I forget if I have this on RevBuild or not. I should probably put that on RevBuild. So yeah, going back to the cash flow statement. Yeah, just kind of surprised at how well their gross margins did, but they did eliminate one of their businesses. if I recall correctly on the call. So I think that was a big contributor to the shift in just margin expansion. Money Boss, dude, what's good? How's it going? How's everything going? Been a while since I've seen you in one of the streams. Missed you this weekend in some of the COD streams. Current operate lease liabilities. Yeah, guys, just doing a little chill stream right now. Next week is going to be the big ones of unleashing the Kraken that is SiriusXM. Oh, just got back from vacation, dude. Hopefully you had a great vacation. Coming back refreshed, ready to kill it. Ready to kill the week, hopefully. So far I've been killing the markets this week. It's been a great week so far. Nice little 4-day weekend, dude. Those are the best. Where you can actually like get away, but like not also feel like you missed the entire world while you were away. Like if you took like a full week off or something like that, like during the work week. Deferred income taxes, which, okay. Huh. Weird. Oh, no, not weird. I was looking at the wrong line item. I was looking at, it looks like a new line item on this quarter. Yeah, it's the operating lease, which they did not have on. I was looking down here. Where's the highlight tool? I was looking right here. I was like, man, they didn't have deferred income taxes. It's like, nope. It's that operating lease liabilities that they introduced last quarter that they didn't have. Ever watch Wall Street Booyah on Twitch? Dude, I have not. Haven't heard of him. What type of stuff does he do? I know some people do like day trading on Twitch. I don't day trade. Like what I do normally during the day is stuff similar to this. It's normally me prepping models for Twitch. It's normally me doing like doing some trading, but like a lot of reading of like investment research, talking to people on the phone and on like Discord and on Twitter about markets and stuff like that. So some of that may change here in the future, but you know, he just does markets. That's pretty cool. I don't know, I feel like just doing streams like this is pretty fun. Every Friday and Saturday I do, which you can see in the schedule, I do like a zombies stream where I stream with like one of my friends or like me alone, and I just like do like investment Q&A every 5 rounds. I actually have a cool little graphic now. It's pretty dope. So yeah, catch one of those streams this weekend if you want to go and talk some Q&A on markets. This is kind of like one of those streams where I could just kind of like, people can go and listen to it in the background. You know the vibes. You know, we got that chill lo-fi hip hop in the background. Alright, moving on down to stockholders' equity. Yeah, this weekend was like the first weekend I tried it on my computer too. Like doing Xbox and streaming from my computer. I think I actually like setting up my laptop to run OBS and stuff on my versus like me being here and playing versus me being downstairs. I also did a really cool episode where my friend Danny, who was on the first ever zombie stream, but you couldn't hear him because we couldn't figure out why you couldn't hear him through Twitch, and it wasn't until like Ethan and I figured it out on a separate stream that we got to work. But Danny and I actually did an in-person stream where he came over to my house after we had some cigars and some drinks, and he was actually there with me, and we streamed it with the big camera, like with a big like wide zoom and stuff. It was a fun time. Think about doing a couple more of those if you guys, if the feedback from that one is pretty good. All right, switching now to the cash flow statement. DNA always the same. What are they talking about? Just unrealized net investment. Okay, so they didn't reduce any of their rev-use assets and didn't do any deferred income taxes. Interesting. Other non-cash. Okay. Ugh. That should be a negative. Changes in other assets and liabilities. It's also a little bit inconsistent just because I did all these like the day of the earnings release versus some of these I did during like after the 10Q was released. So that's why it's probably a little inconsistent in terms of other non-cash adjustments. Changes in deferred rev, there we go. And then why some of them aren't lining up and stuff. Purchase and sale, maturity, short term. Let's get it. Adobe's such a good business too. If you guys have never dug into the financials or understand Adobe, I mean, everyone kind of understands, like, I'm using Adobe right now, right? It's PDFs. It's like Photoshop, it's all that stuff. Their business is just absolutely killer, especially when they made the switch to SaaS or software as a service. They produce so much free cash flow. You can even see like if I go to their full financials, you can just see like just the rapid rise in free cash flow from 2014 to 2018. Even 2019 was a little drop in free cash flow, but because they were buying back so much stock, if I recall correctly. Yeah, because they're buying a ton of stock. They're buying. I mean, they went from they dipped a little bit in free cash flow because they're buying $3 billion worth of stock every year, but still, I mean, they went from 27% free cash flow margins to 41, like in 4 years. It's pretty insane. That just shows you how good of a business SaaS is, and why they somewhat deserve their high multiples. Because, I mean, look, they bought another. I mean, just this year alone, they've bought almost $2 billion worth of stock. It's just crazy, and they can do that and also still maintain a small debt load too. I mean, what total debt load now is? Oh, why does it have? Because it's just back down to $4 billion. So, I mean, they could have paid down a lot more of the debt, but for tax shield purposes, it probably works out better just to go and have it as to have some debt on there, just pay down stock. Tax related to share settlement, right here. I also cut a lot of companies that that like if they do go in, even if they have even if they have like a large amount of like stock-based comp, if you're making, that much free cash flow margin, I'll cut you some slack. cash at the beginning of the period was completely accurate. So, I mean, net change in cash and cash equivalents is the market cap of some of the smaller companies that I cover. It's just crazy. It's just crazy the amount of cash that they generate. Alright. Now that we got that all sorted out, actually, let's just go into EBITDA margin right now. Just for the kicks, really. I actually don't even own Adobe. I used to. I pitched it for my the investment portfolio I was on in college. Like back at like $270, and now it's almost at $420 a share. Nice. Which is just crazy how much it's moved in like a year and a half. I mean, come on. Mid to high 30 EBITDA margins quarterly. There's like very few businesses out there that can generate as much free cash flow growth. I mean, as much free cash flow, or even just earnings growth that Adobe can. So now we're switching. We're switching a lot over here. Getting rid of that. Going to this data sheet, which I'll zoom in for you guys. You can go and see, just as I talked about earlier, all the digital media, all the supplementary data segments and stuff like that is all stuff that was on the revenue build. You can go and see right here. Hopefully you guys can see that. It's the same. This is exactly where I get it from, and kind of how, like, what I talked about on SiriusXM, where I was like, okay, yeah, easiest thing to go and do when you're building out your models is to use some of the company stuff, because they'll tell you a lot of things that you need to know. It's just a prime example of that. Oh, dope! I do have all the gross margins. All that stuff for all the individual segments in here as well. Alright, so starting over here. Let's look at that digital media, which I can barely see. 23200. Oh, I suppose. Oh, nope. Nope. Different scaling. Use a different scaling on this side. Digital marketing. This is all done yearly. That's why you see some of the gaps. Because not all the information that's on here do they release on a quarterly basis, which is really which sucks in a way. Alright, now we're going down over here to our supplementary segment data. This is the stuff that I actually really care about. Because this is where we see all of our ARR, or average recurring revenue, which tells you, okay, on a year-over-year basis, what have they made from recurring clients? So essentially people that renewed subs. So you can go and see they're tracking, $8 billion in that segment alone. And if I go and scroll it out, you can go and see year-over-year. I actually may add in year-over-year growth rates on this. Once I finish this, it's just huge growth. I mean, it's over $1 billion worth of, recurred revenue from a year ago. I mean, just absolutely wild. That's pretty much what SiriusXM does in yearly revenue just in one of their segments, and it's recurring revenue too. You cannot find too many businesses that can produce that type of revenue growth from just people just staying on the service. Total digital ARR. Just massive numbers. I mean, my laptop's starting to do the little wheel of death. For a second, I thought we were gonna disconnect. Oh, guys, after I close off my stream, make sure to go check out the Anti-Gaming Gaming Show. I just got a Twitch notification that those guys are online right now. You guys should definitely go and check them out. They do Fortnite, and they do it in a super crazy way with a lot of really high production value. One of the friends on there is my friend Jake. He does lighting out in Nevada. Yeah, you guys should go check out the show after you watch my stream, which I should be ending here in maybe a little bit, probably like another half hour. But they stream for like 7 hours. It's crazy. I'm just going down to the cogs so that we can go and get a better sense of going down to the cogs down here. Actually, no. What did I do? Oh, I messed up. Guys, I messed up. Cogs are down. Cogs are down here. Hey guys in the chat, is the stream being really buggy right now? I can't tell because I'm seeing like on my stream manager on Twitch that I have like just down on my laptop, it keeps like doing the wheel of death. So it's not saying that like I'm getting frame drops over here on OBS. So if you guys could let me know if it's being buggy or not, that'd be so dope. No, it looks fine. All right, cool. Thank you so much. I just always have to check. I just would hate for you guys like if I'm skipping, if it's like freaking out and stuff. So I've like tried to do this stream like 3 times tonight because my internet was being super weird. Alright. You guys can go and see here. Super high gross margins on all this stuff. I mean, their worst gross margins are 61% on their revenue segments. Like, the amount of industries that would kill to have 61% gross margins, let alone on like that being their lowest segment gross margin. Like, it just boggles my mind how well, like just like how good this company is. Just so dominant. All right, last but not least, revenue growth by geography. All right, there we go. So we've successfully updated all that stuff. This is their GAAP to non-GAAP stuff. And then all their different, this is like all their different products by all those segments that we were talking about earlier. The Creative Cloud, all the apps that go with that, their services. So like After Effects is one that I know. Acrobat I've used, and probably anyone that's like really had to deal with like spreadsheets has ever used, or like it's like how you can go combine PDFs and stuff, Photoshop, all that stuff. All the cloud stuff is like just some of the PDF stuff, but all like all the signature scan stuff, but just in the cloud. So yeah, we actually don't need any more of Adobe stuff now. We're just gonna all kind of chill in spreadsheet a little bit and look at, I think I do want to go and do some revenue growth, some ARR growth year over year. I think would be a nice little thing to add. Looking so far at my 2020 estimates, like not looking too bad. Like let's just go and copy Q1. This is the formula. Alt H. Nope. Control C. Alt H, the old Alt H VV. Sometimes my own. So if I have 2 more quarters exactly like Q1, I'm in for, I'll probably have underestimated the rev. But you never know. This is why having those charts is so nice, is because I wouldn't have had to go and input numbers like that to go and see how my thing was tracking. So maybe we do that. I don't know. What do you guys think? Do you think we should go and do the charts this stream, or should I not go and do that? Just do a little revenue growth year over year on some of these guys, and we call it a night. I added a 0 there. It was not supposed to be there. Do it all? You want to go and add in those add in the charts? All right. Let's go and close down. Oh man, what is it? Alt H, Alt A H. There we go. Look at that. So you remember some of those shortcuts. Alright. This is the downside of how I do some of this stuff. So it'll actually really help though for doing the charts. Actually. That just gave me kind of an idea. Instead of doing all the growth rates on here, I can just do them on the charts instead. It's going to be so much cleaner and so much easier to do. Where'd I add that extra? Dude, it's all good. I think my friend Bradford's probably playing Warzone right now. He's a Warzone fiend. Warzone fiend. I just don't play like as much like Warzone anymore, just because like my friends I normally play with, they play at like 10:30 p.m. here. I'm like, dude, I can't, like, and they'll go to like 2 a.m. I'm like, I can't do that every night. Alright. That means I gotta hustle if the boy Money Boss is leaving. I gotta hustle. My sleep is fucked up, dude. I can't do that. Like, I can't rise up by the time the market opens if I go to sleep at 2 a.m. playing Warzone. You gotta be on the desk, dude. Even though right now my desk is 5 feet away from my bed, you gotta be on the desk. say J. There we go. No. I want to do this way. Dude, I'm not West Coast. I am Midwest. I am Midwest. But dude, I know what you mean. I had a friend that he did an internship with PIMCO, and just absolutely brutal, right? They were in the office at like 3 a.m. West Coast time. He said like it was dope because they could like going in, leaving at like they left the office right at like 1 p.m. West Coast time. He said that was nice, like especially on Fridays, but everything else he said was just like it's so tough, just unbelievably tough. Pro tip here. Pro tip. Something, oh God. I'm now being like a super stickler on format, which is disgusting. Oh God, Excel, don't crash on me now. It's just like one of those times where I'm like, yes, thank God I laid out my spreadsheet somewhat decently. But yeah, dude, he hated having to go and do having to do all that stuff. He said it was just like just unreal. I cannot imagine that. I have a friend that is a trader for Bridgewater, and he does Asia hours. And I was talking to him about that because I was applying to a job that did Asia hours. I was like, how do you adjust yourself? He's like, the first couple like months is rough. He said, but then like it's kind of dope because since he's in Connecticut and like all of his friends are in New York City, like by the time he wakes up, because he wakes up at like 5 p.m. He's like, by the time you wake up, like you like on Fridays you can just go out with all your friends. He's like, by the time you wake up, it's like starting your drinking versus like everyone else is like at happy hour. Which I was like, you know what? There's a blessing and a curse to everything, right? But dude, I couldn't imagine working Asia hours or even London hours on the East Coast. That would just be terrible. Going here. So I'm starting to do like a little speed run right now. that stuff is looking muy bueno. I want you to do that. I don't think set of sub. Oh, dude, that's rough. Dealing with Rome, that's such an interesting European financial center to be dealing with. Like, I know people, you know, over in London. London, of course, you know, super cool guys and all that stuff like that. But like Rome, that's interesting. Digital, oh. Let's just fuck it in. F R. There we go. Yeah, Rome's an interesting one to deal with. Oh, guys, watch out. I'm starting to use my head now. I'm starting to use my head now. I'm starting to be like, oh, that's right. Look at all the stuff we can actually go and do. Let's just double check that, though. Digital rev. Oh, spot on. We're also gonna go and give him the old what the hell do you mean? They have blanked values in them. What the hell? I don't understand that. Fuck it. You heard it here first, folks. If you can't do a workaround on the stream, just say fuck it. I don't want to do I think what's more important here. How do I go and calculate that? Stop. Did I not do it over here too? just drag it over. That's really weird. I don't think I want to do margins quite yet for these guys. There's gonna be so many charts. Oh, I think I know why. That should clear some stuff up. There we go. Actually, no. Remember, we're going to be smart. We're going to be smart and use our Excel knowledge to help us. Experience sub cloud rev. I could also do it this way too. Okay, and do mark. Okay, so that's all good. Don't care about that, don't care about that, don't care about that. Alright. Oof. Look how sluggish inserting those extra rows is. That's just oof. I think I want to add some. I don't know, I just always like having that space between some of the stuff. Makes it look a little cleaner. I know there's also easier ways to format paint than that, but I just cannot wait for one day someone who just like is beside themselves about how I do like Excel. It's gonna be someone that works in like investment banking, and they're just gonna be like, dude, you're using too much mouse. I'm gonna be like, okay, it's fine, calm down. Why won't it let me? Whoa. Okay, I understand now. My numbers lock somehow went away. I never have my numbers lock off. never. That's like one of my huge rules of thumb. I never have them lock off. Also, that's funny. It was the cell reference. So I was like, whoa, why is that all muffed up? Percent of rev growth. I'm also going to take the yearlies off for those. That's our wondering. Because for our charts, for those of you that don't know, we always do them quarterly. So it's the best way to track it's the best way to go and track our estimates, our yearly estimates. Dude, we must have lost Poker Mad. He went silent in the chat. Alright. Boom. That all should be right. Those should, of course, not be because oh, I forgot to do year-over-year revenue growth. Why did those not go? This can be a little wonky. I spent all that time we are starting to fly now, boys. We're flying. We're like coming up on like the exact time that I want these streams to typically last, which is like an hour to an hour and a half. Doing like 2 hours is way too much. Thank you, sir. Oh, I'm so sorry when I'm looking at like I can't see your chat on the thing because it's just the same white. You're hopping off, you're getting on Warzone. Thank you so much for being in the chat though. Really appreciate it. Thanks for stopping by once again, Money Boss. I'm actually gonna go and fix how the chat looks right now. Text color instead of white. Let's put that black. See, oh look, see, looks so much better now. Alright, hopefully I see you in the chat. Hopefully I see you on the stream on Friday or Saturday. Fine, Warzone, no big deal. Boom. Alright, now let's delete all of our yearlies. Except for 2020, because we care about that. HDC. Alright. Let's go. Cool, cool, cool. Oh no. I just remembered. Oh. I'm gonna have to do some of these. Oh. It's another thing too. This one's gotta go. That should be all good. I gotta save this song. This is a good one. Dun, dun, dun. Oh, where's that playlist? There we go. There we go. Dun, 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 dun. Sub growth rate. Actually, I think for all of them, I should be able to. Whoa. Whoa, 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 whoa. Does that really jump that much? Yeah, no way, I was gonna say. Okay, sub AM 49. Am I in a way different part of the 6. That makes sense. AM8, AM9. Okay. Oh no, I was reacting to this. Do I really have it grown that much? Holy shnikes, Batman, I do. Oh, because that's probably why. I probably need to adjust that. All those things that you find when you model sometimes. I think I'm only going to do gross margins. Okay. These guys make it complicated. Screw it, I'm just gonna do just to make it easier. I'll be the cleanest thing. But that'll make it pretty easy. It'll make it easier on me. Just gotta remember, we gotta skip one down. Oh, it shouldn't be easy. Oh, it shouldn't be hard because I already gotta do it. Dope. So we're using the noggins right now. That does not look right to me, though. Actually, I can go into... Oh no. I think this is the best way to do it real quick, like. Oh, because I don't forecast that out. That just got way easier then. I don't forecast out ARR. Yeah, none of you guys matter. So it's this over document cloud, right? Sorry guys, I'm just trying to figure this out real quick. Divided by digital marketing, okay. There we go. Well, that year-over-year growth is looking mighty nice. Except for you guys. Yep, I know. What can I do for you guys? Creative Rev. Creative Rev. We'll just do a little. Document cloud. Ooh. Digital media. Digital media is gonna be like so stupid to have to do this formula. Right, like look how ridiculous that is. Yeah guys, I may have to really redo my 2020 assumptions. This is looking really wacky. But, you know, that's why we do these charts, so you can see it. Alright. Let's go, first one. I screw up. There we go. No, it didn't want to do it. There we go. Okay, first chart. We'll do subscription. We'll do both. That's a lot of green. Yeah. Because of formatting, my dude. That's a lot of green because that's some pretty bullish assumptions over here for Adobe. Should really just make a chart template that always references the top, like that always references one particular cell. That way it's always like my dates. That way I can auto generate charts a lot faster. I feel like that would be spectacular. Year of rev growth. Yep. All right. We could just do it again. We're just gonna do it again. I'm really starting to think maybe doing a macro or a chart template would really be helpful for this. So I get really tired of having to always add in the data labels for quarters. Oh boy, does that just look terrible. Both be oh god, having a secondary axis makes it even worse. Name that product because that's for our product revenue. Just realized my last couple financial streams have all had like heavy emphasis on like doing the charts. I should just call like just title the streams how to make charts in Excel. Alright, I think I'm gonna do one chart for total margin and then a chart for all the gross margins. Like all the little different all the sub, revenue margin things. Okay, as long as I can see the gap. Cool. And only ones can look ridiculous. I think I'm just gonna maybe put that on a separate axis for service and support, since their margins drop like a rock. Yeah, let's see what that looks like. Is that more or less helpful? It looks a lot less helpful. Dope. It's called Segment Jam. Amazing, amazing. Okay, and we are getting close. We're getting close to my cutoff times for these streams. I know, right? You're saved. I was thinking we could just do these on the same chart and then do the different axes. What? Why won't it? Much better. I'm just gonna name them. You guys know what it's about. These still don't take that long to do. Actually, why don't we just... Look, life hack right there for making our charts. Total life hack. Why didn't I do it for all the other ones? Wow. Aren't I just stupid? I'd rather show... Okay, I already have digital media there, so I do it again. And then creative and document. Actually, guys, I think we're good on charts, to be honest. And with that, I think we should just end the stream there. Guys, thank you so much for watching. Hopefully you guys got something out of this from, you know, us updating. Clearly I need to go back in here and update some of my assumptions. That's what I learned tonight. I want to thank you guys so much for watching once again. Make sure to follow me on Twitter, which is in the info page of my Twitch channel. Also, please join me every Friday and Saturday for doing Zombies Q&A. It's always a fun time, always a fun and interesting stream to go and do. Really appreciate you guys coming into the chat and watching tonight. And yeah, see you guys next time.